I love telling people about how the beauty of financial planning is that I can't guarantee that clients are going to make the best decision, but I can guarantee that they're going to make a well-informed decision.
Exactly.
Right? What type of analysis do you do if a client comes in when it comes to Social Security? How do you help them make that decision?
It's a really good question. And we do have great softwares. We use like a financial planning software. We also use a tax planning software. When we do like a Social Security claiming analysis, we look at everything. We look at their income right now. Do they have like a gap that needs to be filled? And we'll look at their accounts. What accounts they have? Do they have only pre-tax accounts? Do they have like a combination, like more diversified portfolio of from the tax standpoint? Like they have Roth, they have pre-tax, they have after tax. And then we run different scenarios. Imagine claiming as early as 62. What about 65? What about 67, like full retirement age? What about 68, 69, or 70? And then we look at the break-even age. So basically it tells you, you have to live until this age for delaying to make sense because you will get a higher benefit amount over your lifetime. So of course, if you expect, and everyone probably would like that, to live longer, like a long, healthy life, claiming later makes more sense because you will receive a higher benefit amount. So when we do that, we just want to make sure that the surviving spouse will be good because the expense is probably not going to be that much lower, but the income can decrease, right? Of course, it's not the best thing to look at, like dying earlier, but it's nice to be well informed and making the decision knowing all pros and cons. Like, so you delaying is better for you, for example, or like claiming early is better for you now. But because your wife is younger and, in our plan, she can live longer. When we look at the plan for your household, it makes sense to delay benefits.